Yo, Alex, what's going on with Bitcoin? Hey, Alex, where's Bitcoin going to be, in a year or so? Where's it going to be in 6 months? When is it going to double? Do you think I should sell some Bitcoin at $9,300 and buy it back at 7,000 so I can get more Bitcoin? All these questions, I get it all the time. Look, whether you're already in Bitcoin, you have enough money and you're looking to just see where your investment's going to go, or you're looking to see if you could buy more Bitcoin, you could buy cheaper Bitcoin as the market goes down. In this video, I'm going to attempt to solve that question for you guys with a post-halving price prediction. Keep watching. What's going on, everybody? Alex back with another cryptocurrency video, and today we're going to be talking about Bitcoin, everything Bitcoin, what's going on in the macro conditions, what's going on in the world, and how Bitcoin could potentially play a safe haven asset. Not yet, hasn't decoupled from the traditional finance, S&P 500, stock market, et cetera, et cetera. But I will say that it could play a major role in different ways, different variables. This is from people that have more insight than me with more money, as well as a lot of other articles. And of course, I put my perspective and insight into these types of predictions. This is not financial advice. This is all theory, but people tend to follow what I say because I back up everything with facts. If you haven't already subscribed to the channel, my name is Alex. Nice to meet you. Let's do us both a favor. Hit that subscribe button as well as the push notification bell so you get videos like this all the time. Like I said, I try to back up everything with facts, and I try to keep things as down to earth as I possibly can. Of course, I'm not perfect. I'm a human being just like you. So let's grow together as one and try to build this community as big as we possibly can. We're getting bigger. I'm not going to stop. So let's jump right into the video. First thing I want to talk about is what's going on in the world. I'm sure a lot of you are experiencing right now. It's pretty straightforward, okay? They're opening the world to the public again, right? Now, this is a direct correlation to the spikes of coronavirus cases. There's a lot of people, more people getting infected now than ever, or now that I don't want to say than ever, but I would say the spike, it's increasing again. And I would say that this is obviously because they're turning the economy back on. Now, what you have to understand is that if the cases of coronavirus start getting to a certain extent, they're going to close it again. This is called pump breaking the economy. So essentially, they're letting it open. They might close it, and then they might let it back open, and then close it again. Now, the thing you have to understand with macro conditions and the economy of the world is that it's momentum based. It doesn't just you can't just turn it on with a switch. Right? And this is going to be like, look at the unemployment, for example. Look at how many people are unemployed. This is like the most in US history ever in the past like couple months or so. And people are struggling financially. And people are not only struggling financially, but they're getting scared. People with a lot of money are getting scared. So you could see this in the G20 currency. So if you come over here, there's basically a website that shows all of the currencies that kind of directly trade with the United States. They are tied to the United States. So basically the US has an incentive to keep them up and running, because if they don't, it's going to be a tragedy with trade. It's going to be a tragedy in all types of ways. It's basically the domino effect. If we start seeing other countries fall, the the United States dollar is the last domino. Hence why everybody wants the US dollar right now. There's a whole bunch of countries, a lot of rich people that are looking to park their money because they're scared. They don't want to spend it on leisure, right? Go to the stores right now, and don't go to grocery stores, because there's certain items that are actually going to be more expensive. So food, toilet paper, the things that people are looking for. Same thing with scarcity and Bitcoin. The things that people are looking for are going to gradually become more expensive. But if you look at the things like, for example, clothes, go look at the stores, see how crazy the discounts are. You're going to see 50 to 70%. I took advantage of some of the clothes. But like, the reason why I say that is because that directly correlates to why people are scared. Their money purchasing habits are showing that they rather get items that are going to last a long time, that are good for survival states, rather than leisure items, okay? And this is the true across the world. But a big thing about people on other sides of the world, what's like Australia, China, different countries, they are scared. And so their purchasing habits tend to acquire more USD, right? They're actually scared of their government currency, whether it's hyperinflating or losing its value. They know that the purchasing power of the US dollar is increasing because everybody wants it right now. Even though the government is printing, stimulus checks, quantitative easing, and these swap lines to provide liquidity, right? Even though they're pushing more money out into the system, purchasing power will either stay the same or increase because everybody wants more US dollars. But the problem with that, these G20 currencies are connected to each other. So you're going to start seeing things, and it already happened, before. You're going to see more of it. You're going to see central bank swap agreements. Okay. So essentially These facilities, like those standing agreements this happened in 2008, but essentially what they do is they inject liquidity into other countries. They're essentially taking the US dollar and they're giving it to other countries, like the reserve, like 60 billion for each Reserve Bank of Australia, the Central Bank of Brazil, Bank of Korea. They're basically giving money to prop up these other countries, which in turn devalues the US dollars of the people that are actually holding it. So remember I told you guys, I talked about this in previous videos. It's a negative feedback loop. And I'm basically going to give you guys evidence to why this could potentially play a huge role in helping Bitcoin. And it might not be the way that you think. It might not be the way of like just them buying it. So this is a chart right here. This is the US dollar currency index that basically measures the purchasing power of the US dollar. And here's just two, countries just being completely devalued comparison. We're going to start seeing the dominoes fall. Like I said, the US dollar is the last domino, so everybody's trying to get some dominoes. So right here, there's another article, and Trump talks about it all the time. They want to basically, improve liquidity. There's huge liquidity strains. Everybody wants a piece of the US dollars. So this is just more like evidence. And this is like kind of the current conditions right now. And as they give more liquidity, they will devalue the purchasing power of the dollar, okay, which is a negative feedback loop. If you don't understand what I'm saying, so essentially they're going to provide liquidity for the world, and doing so, it's devaluing the dollar. People get even more scared when the dollar is devalued, and they accumulate more USD, and it just keeps going into this negative feedback loop, and it might open doors. And the funny part is the liquidity swap lines, they are not even they're not even holding up the demands of what people want in the world. So there's a lot of talk, and with like a global rush, like for example, here's just another article talking about it. A global rush into US dollars driving extreme market moves and temporary shortage. With all these things colliding at once, it's very interesting to know that cryptocurrency has a solution for all these problems. And I'm not talking about Bitcoin. What I'm specifically talking about is stable coins. So stable coins, they're really important because right now, for you to go get some, US dollars in Australia or something, there's some huge major loops and fees that you have to jump through. But as a cryptocurrency advocate, you could essentially log into your exchange and buy like US Tether, even though I don't believe in Tether, you could buy DAI or any stable coin immediately, and it holds the value of the US dollar. So if you come over here to DeFi rate, you can see that just by holding these stable coins, you actually get a better percentage than if you hold it in a bank. It's crazy. It gets crazy with DeFi. In another video after this, I'm gonna be talking about how you can like arbitrage money into making free money. And that, it was crazy. It's blowing my mind. But you can see right here, like just for holding DAI, you can make 4.42%. So not only can you have access to this US dollar, that what all these people are looking for, maybe they don't want the volatility of Bitcoin. Not only will you have access to that, but you'll also get that 4.42%. So it's going to be very favorable for a lot of these hedge funds, these big medium-sized institutions. So right now, a lot of the small-sized institutions are kind of already in. Now, you guys know about Peter Thiel, how he comes out, starts talking about, Bitcoin and how that's what's considered a medium-sized institutions. I don't think it's going to be like a rush of all these hedge funds, people with $100 million to $1 billion coming in. But what I do think is it's going to be slow and steady. There are going to be these institutions that slowly make their way into Bitcoin because of these very beneficial reasons to what's going on in the world. It's like a direct problem that's being solved by stable coins, and it's actually like you can make money, and you can make a lot more money than normal. So it's something that I know for a fact a lot of rich people are going to be looking for, right? And here's just more evidence. Like for example, if you look at compound finance and DeFi is doing better than ever, right? As you can see here, compound finance just took over the spot over MakerDAO. We're going to be talking about this in another video, so stay tuned, guys. But very simple, straightforward. You go to CoinMarketCap, all the DeFi coins are doing amazing, right? It's just crazy the problems that blockchain technology and decentralized. Look, synthetic network, Ren, DeFi, Banker, DeFi. All these DeFi products are doing pretty well. And even some people are calling for altcoin season. I don't know about that exactly yet. And here's just another example of the CEO of exchange OKEX suggested, that a second United States stimulus plan can result in Bitcoin's price growing further. With the second stimulus check to drive Bitcoin adoption growth. He's basically saying that last time it increased Bitcoin by 58%. Grayscale Investments is doing really well. People are hoarding stimulus money, are more likely to buy Bitcoin. If more money flows into the market, leading to more held by retail investors, second stimulus, I think they would use Bitcoin as an alternative. Or he said it just exactly what I'm saying now. He pointed that stable coins is an alternative. So if they don't want the volatility or the scam potential of Bitcoin, I guess you could say, they can go to stablecoins and other financial instruments. That's the beauty of this, which you can get like a 7 to 12% yield. I don't see why they wouldn't take advantage of something like that. Now, the beauty of this stablecoin situation is that, yes, we'll have more surveillance. There will be more KYC. Being that government's getting involved with cryptocurrency, there will be problems of data identification, and it won't be as anonymous as Bitcoin. But the whole point is that this is actually being utilized. Like right now, as you can see, this is a Grayscale article. I don't know if it was exactly them, but they quoted a survey that asked, are you analyzing the potential impact of monetary and financial stability of stablecoins? And 58% of them said yes. So it's a problem they're looking to solve already. This is bringing exposure to Bitcoins and crypto. And they say it best here in the conclusion. The takeaway is that the central-backed stablecoins are increasing the exposure of Bitcoin, and it's lowering the learning curve for people. So essentially, they can start buying these stablecoins and feel safe about their investment, making that 4 to 7% a year. They kill the learning curve. So now they know how to get Bitcoin. And then as you can see here, Bitcoin's not really waiting. It's increasing in purchasing power, and it's doing better and better over time because of the scarcity factor, because it's a superior money. So essentially, these stablecoins are providing leeway for a current problem, and Bitcoin could potentially follow with the big problem, which is money in general sucks. Money sucks, right? And the US dollar, the way they're handling and printing and the artificial inflation and everything is not good properties of money. It has its place, right? With Facebook, Libra coin, all these coins, they're looking to jump into the market, but the network effects of Bitcoin are just too much. And I do see, a lot of those people potentially leaking into Bitcoin and driving the price up of the whole cryptocurrency market in general. Exposure is exposure, and people are going to know the truth versus the fake. It's as simple as that. And once they start realizing the control of these central bank currencies, they're going to move into something more trustworthy like Bitcoin, right? Now, this is what all the same news, like I have all these articles I was going to talk about, but it's pretty straightforward. I wanted to tell you guys a story because stories are easy to remember. It's going to help you, distinguish the fake versus reality. And when you're doing your research, you can find the narrative and everything. But as you can see here, this is the same time PayPal is rumoring, they're going to potentially accept Bitcoin because they're, basically in a battle with Cash App. Cash App has been making so much money off of Bitcoin that they essentially, it's incentivizing PayPal to either get with it or get left behind. So they're rumoring to, accept Bitcoin as a payment. It's simple, straightforward. PayPal right here, look, there's only 21 million BTC distributed equally across. If you just put those just across the PayPal users, it would amount to them only having 0.068 Bitcoin per user. There is just not enough Bitcoin, and I don't care what's going on in the world. As long as that remains a factor and Bitcoin doesn't get double spent or new Bitcoins be created, some weird quantum hack or something, as long as the fundamentals stay intact, it doesn't really matter. And this is where I come into answering that other question for you guys. It doesn't really matter what price you get Bitcoin. Anything under 10K is a phenomenal price for Bitcoin. Considering the laws of physics, the laws of monetary policy, and what's going on in the world, this can't be held up. They're printing money out of thin air. They're propping up the economy when we know people are not working. We know that value is not being created in the world right now. And we're still supposedly, quote unquote, doing well. This is not real. And you guys know it. I know you can feel it. This is just not how life works. So we're going to see a contraction, and whether that, it goes into stable coins or cryptocurrency in general, either way is a win. It could even potentially go into gold and silver. But the percentages, I'm not going to guess on that. What I will say is that if you guys haven't already looked into the stock to flow model, it's pretty simple, straightforward. They're predicting like a $36,000 Bitcoin by 2021. That's in 6 months. Now, if you were to put that in the world's broad money, in the terms of world broad money, there's about $90 trillion on Earth. It's very fairly liquid, not 100% liquid, but fairly liquid. So if you capture potentially 1 trillion, and we were very close to 1 trillion back in 2017, we could potentially see Bitcoin rise to, I would say, this number, which is me being 1% correct, right? I talk about the world's broad money before. There's only 1/3 of 1% of the world's broad money in crypto. If we're about 1 to 2% correct, we could easily see Bitcoin go to 30 to 50,000 by the end of the year. I would say more towards the end of the year, beginning of 2021. That would be like a medium to long-term prediction. And you guys know what's going on in the world. It's pretty straightforward, but let me just recap what's going on. So as the world's burning, these other countries are not doing as well as, of course, the United States, because the world reserve currency. They're actively printing more money to solve liquidity problems across the world, while the world is actively buying more USD at the same time, devaluing people's currency and causing a negative feedback loop of potential, I wouldn't say super hyperinflation because we're not even close to there yet. But I will say that this liquidity crunch might cause people to accumulate more stable coins. Okay? Stable coins are very, very lucrative right now. You can get up to 4 to 7% depending on what it's doing for the day. And DeFi is just absolutely booming. There's a lot of other arbitrage techniques we'll be talking about in later videos that you could potentially use to make money with your Bitcoin or even your stable coin. We'll have a full video for that. But yeah, the whole gist here, guys, is that cryptocurrency has the tools to meet the demands of the problems of the world. And it's a matter of time. It's a matter of education. And it looks like the governments are kind of getting on board, or they know they're going to get left behind eventually by creating their own stable coins. So we'll see what happens in the future with stable coins. But that's it for this video, guys. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with this technology, you will get left behind. Thanks for watching this video, guys. Catch you in the next one.